we should call it why support and resistance doesn't work. But like I said before, Lindsay, it's not that support and resistance doesn't work. It's just that it isn't enough to give you the edge in the market that you need for consistency. So we're going to discuss this idea today because I think a lot of traders get caught up in it. And I think you bring really good experience in this because before ASFX, like you've spoken about before in other videos, you talked about how support and resistance was something that the group you were with was really focused on, even to the point where that previous video we did about risk reward a couple of days ago, we talked about how like the way that they were showing you the support and resistance levels, it was screwing up your risk reward in a lot of situations where you'd have bigger stop loss than potential take profit because of that support and resistance. So going back to where you like got started in trading, if you think back to when you first got into this, very quickly, did you figure out what support and resistance was because like everybody was talking about it?
Yeah, because that's how I was initially taught, was really just naked charts and drawing support and resistance. Using
no indicators, nothing, just price action,
no
just
indicators,
candles.
no price action, support and resistance, that was it.
And when you were going about this, were you drawing the support and resistance levels? Like, tell me, was it lines on the bodies? Was it lines on,
was it lines
zones?
No, it was lines on the bodies, and we drew them from the daily. So we would go and look, for the highs or the lows on the daily, bring it down. And so that would have a black line. And then coming down to the 4 hour, we'd do the same, and that would be an orange line.
Different colors for different time frames.
Blue for the 1 hour and pink for the 15-minute. Whatever colours you wanted to put on your charts was how it did it. And I kind of like made my lines a wee bit thicker for the hour and the 4 hour because I was kind of zoned in on these zones more than the kind of 15-minute.
But where did you figure out that there was more to your edge than just support and resistance? Can you remember anything that clicked with that?
Because I was really struggling to try and find that consistency only using support and resistance. That was obviously when I went on to do my research online to try and find what could I bring in to try and find my edge before coming into ASFX. And when I obviously started to follow you, I knew that you were using EMAs, and that was something that I was taught in my previous community, but it wasn't something that my mentor really wanted us to use. She wanted us just to use price action and support and resistance, and that was it. She thought that was a better way of trading. But for me, I really aligned to using the EMAs. So that was kind of first thing that attracted me to ASFX was, okay, but you are using 5 EMAs, but I was really only taught just to use 1.
Right.
So I kind of got my head thinking, right, okay, how can I cooperate this in with what I've already been taught? So I thought I could use the EMA and try and bring that in to help me trading off the support and resistance. But it helped me in my direction. It helped me on keeping on the right side of the trade, but it still didn't help me in my risk reward.
So it's interesting, like the idea of support and resistance still stayed with you, but now that you saw the EMAs, you were like, okay, these are like moving support and resistance levels that I can still use and still have that concept. Because I think think about what support and resistance is. It's telling us that price has stopped at that level and stayed there for a certain period of time, which normally means that there's a lot of buying and selling going on at that price level. It's a sensitivity zone. So I feel like what you did was like you kept the same mindset, but applied it with like new techniques. And that new technique was the EMAs, which started to develop the edge for you a little bit more. Because like you said previous, you were drawing just to lines. I wanted to go back to that before. You know, I have a video where in that previous video I've made where I talk about drawing the zones using the wicks and that 2 candle rule. Comparing your experience with both, do you find that lines just at a single price level, is that a better way to draw the support or resistance, or is it better to draw a zone? What do you think?
I was always taught that obviously that doing it with the bodies are stronger than the wicks are. And we used to go by the touches, so we're looking for more bodies to touch the line, but obviously we still include the wicks within, but the wicks are weaker. So as long as we can get like, I think it was over 4 bodies touching that line, that was strong, and we could use that. But what we still had to really kind of do was, even though the line was there, if there was a lot of wicks below it, say on our support line, we would still have to know we've got enough stop loss to cover the wicks as well, because we like it to obviously cover the wicks to be safer. And that was why when I was trying to do my risk to reward, I was never getting it, because resistance was everywhere, that you looked, you can see resistance. So if I was covering wicks and a stop loss as well, I knew my stop losses were always going to be bigger than my next resistance line was.
Right. So your risk reward was never going to be great.
So my risk reward was never right.
So taking that again, it's just like, I feel like the mindset, because you saw something there, you saw something in this idea of like, okay, price does move to certain levels and then it stops there, and you can trade off these levels. Taking that and applying it with the new tactics of the EMAs, it gave you, like you said, a direction to stay on the right side of the trade. Because with the support and resistance levels, you could go so far back on a chart and it might look like support over the last month, but if you go back the last year, it could actually be resistance. Meaning on the bottom versus on the top, support on the bottom, resistance on top. So that's the other reason why, and I love this video concept, is because support and resistance don't work because it's just everywhere, like you just said. And what I'm trying to get at is just that you could go back so far, and that level that might be significant there could be another one 5 pips above it if you just go back far enough.
I could never get direction. I could never really find my direction, and I knew I always wanted to be on the right side of the trade. I wanted to ride the trend. But with me using support and resistance at all times, I was never always taught to go on the overall trend.
So